Good morning. Thanks for joining us at what is relatively short notice, so we can talk you through our new and exciting development at Central Asia Metals. We can go to the disclaimer slide. Now, we usually just flick across this one, but I do ask you please to have a read of it for a change. There are some provisions in here that relate to the scheme we're going to talk about today, which is happening in Australia, plus also the US nature of the acquisition as well. So if you are too lazy to go through the whole thing, just go to paragraphs 1, 7, 8, and 9, and we'll take it you've read the rest in the past at some point, but thanks for that. So, yeah, very excited to announce this morning. This almost weirdly stems a little bit from some disappointment we suffered towards the back end of last year when we came close on a transaction, didn't quite get over the line. After a lot of hard work from the entire team, Louise and I encouraged the team to go out and scour the world for opportunities. And Antler was unearthed by one of our guys. We had a closer look at it and really liked the fact that it was a PFS stage project. There were great metrics around that pre-feasibility study that had been done. An attractive price, which led us to offer the 5 cents a share, which translates to a purchase price of $185 million for New World Resources that we've announced this morning. That is around $120 million. That transaction will take place by way of a scheme of arrangement and will add an attractive growth project to our portfolio, and that is in a good location in the USA. This is non-dilutive, so we're not issuing any equity. It's all funded by cash, and that cash is financed by a credit facility that we've arranged with our relationship banks. It is subject to the Australian scheme of arrangement, and that entails a shareholder vote. We need 75% of the votes, 50% plus voting of New World shareholders. And we expect this transaction to be implemented sometime in September 2025, and that's going through this scheme of arrangement court-led process in Australia. So our strategy has always been to build a pipeline of assets, and we've hopefully articulated that quite clearly to all of you over the past few years. And Antler really neatly fills that gap that takes us, from exploration on the one side, cash flow assets on the other side, and we're adding a near-term growth prospect. We're going to grow that from a development asset of Antler's style in the middle of that slide. Antler really complements our existing portfolio. It's brownfields development and potentially doubles our copper equivalent production once we get that into production. We've got 2 exploration assets that will join the portfolio as well, Javelin and Torero. They're slightly more advanced than some of the Camelex stuff, slightly less advanced than Aberdeen. So have exploration results there that are fairly encouraging. So, starting to populate that pipeline that we've been trying to do for the last couple of years. So let's move on to the highlights and the rationale. So this, as I said before, is a transformative transaction. It adds material near-term growth to what we already have, which are the highly cash-generative assets. It's high grade. The recently announced resource is 14.2 million tons at a copper equivalent of 3.8%. And is in a tier 1 jurisdiction. Arizona is the copper capital of the United States. There's excellent infrastructure, and we've also got good access to services in the region. New World Resources has built a really good technical team on site already, but there is access to further technical skills in the region. And as I said earlier, this is an attractive valuation. The offer effectively implies a price to NAV multiple of 0.2 times. That's based on the PFS estimates that we'll walk you through later. But given that this is an advanced project, PFS done, DFS underway, there's a clear pathway to project development. And also we've got, it's unconstrained by any financing arrangements right now. So it really leaves the field open to us to finance this more as efficiently as we can in future. So the PFS numbers on a pro forma basis illustrate that this is indeed a transformational transaction. We've got material changes to our resource base, effectively doubling that resource base should the transaction complete. And the payable production goes up from our current 23.8 thousand tons of copper equivalent every year to potentially just under 54,000 tons of copper equivalent as a group. Very importantly, once in production, we don't dilute our costs. The Antler pre-fees all-in sustaining costs are lower than our current AISC. And excitingly as well, the projected cash flow generation of Antler will more than double our free cash flow that we currently enjoy. And as I said, this is also a development asset. So over the development cycle, we expect to add significant value to that asset, and the potential for our shareholders, therefore, will be realized that way as well. So what have we got? So first of all, we're in Arizona. If we look at that map, you know, the key will show you that there's a lot of major copper mines in Arizona. There's a lot of copper projects in Arizona with some excellent infrastructure. We've got transcontinental railways, we've got interstates, all within 15 kilometers of the asset location. And as I said earlier, really good access to skills. Getting there from the United Kingdom is pretty easy. We've got Las Vegas within 2 hours of the asset site, and Phoenix and Tucson also within a few hours drive of the asset location as well. This is a high-grade VMS deposit, which means it's polymetallic. The M&I resource, measured and indicated resource, that's the one we have the most confidence in, 12.5 million tons at a 4% copper equivalent. It's underground mining using long-hole stoping and paste backfill, and it's conventional flotation to produce 3 concentrates via those flotation cells with dry stack tailings on the back end of the plant. So as I said, you know, this is a really complementary asset. The paste backfill, long-hole stoping, dry stack tailings, froth flotation, concentrate marketing are all skills that we've developed over the last 7 years with the ownership of Sasa, and these are skills that we have in-house currently. So as I said, really high quality asset, complementary skills, and provides a lot of growth to our portfolio as well.
We can see the production profile that was highlighted in the PFS on the right-hand side of that chart. That's supported by a really solid mineral resource estimate that Gavin's mentioned. Within what they call the Antler sulfide domain, there's around about 13 million tons at 4% copper equivalent, of which 2% of that is copper. The project, as you can see, envisages a 12-year mine life at a run rate of 1.2 million tons per year. So you can see from that chart, in the first full year of production, the PFS was envisaging production of 33,000 tons of copper equivalent per year in that first year, and averaging out for the 30,000. And that's about 140% increase on us. Last year, we produced around about 24,000 tons of copper equivalent. And the project should be able to do that for around about $2 a pound. And that's versus a current copper price of around about $4.30 per pound. We often talk about our purpose being very, very strongly linked to producing base metals. So importantly, in terms of the copper equivalents, 55% of this project is copper and 91% is base metals. So New World Resources completed this PFS we've mentioned in July 2024, and that was to build an underground mine, all the associated infrastructure, processing facilities, etc. And that was estimated to be at a capex in the order of $300 million. For that, we will be looking at life of mine average revenue of $279 million. And then that should generate EBITDA in the order of $150 million. Life of mine average post-tax free cash flow should be $115 million from the pre-feasibility study. And putting all that together, the project at pre-feasibility study level envisages a post-tax NPV of just under $500 million and an IRR of 30%. Importantly, the DFS is already underway under the New World team and the strong team that they've got in America. We're going to be involved in that post closing the deal, and as Gavin mentioned, we've got a lot of our own experience, which we think we can bring positively to the overall DFS studies.
Right, so as I said earlier, this is a brownfield site. You can see from the photographs that old head frame in there. It last operated, I think, in 1970, but yeah, at a small sort of run rate. And the land is primarily what they call patented mining claims, unpatented mining claims, and either 100% owned or with the option to purchase 100% of the land. So around just over 90% of the land disturbance from this project will be occurring on private land, which basically makes the permitting and engagement with the community a lot easier. This is a new country for us, the USA, a new location. So we have done extensive due diligence on this. And we've really been impressed by the work that New World Resources has done to engage across the entire stakeholder spectrum. We'll continue that work. And the reason we do that is because it's best practice rather than we've identified any concerns. And we've got a great track record as Camel in community engagement. We're looking to build on the excellent work that New World has done on that front already. As I said earlier, this is all going to be largely 100% owned by the asset itself, the land. So the permitting pathways are fairly clear. And when I say that, I say that all our BD activity is really asset led. So the interest in this was actually pre the election of Donald Trump. So the project now benefits from an increasingly positive permitting environment, given his involvement and the new administration's interest in mining in the US. There are two kinds of permits. You need federal permits and state permits. The federal permits are under what we call a mine plan of operations, and that the BLM, which administers this, the Bureau of Land Management, has determined that that MPO, as it's called, can be reviewed under what's called an environmental assessment, which is the shorter form version of their review, and that puts us on a 12-month permitting path for the federal permits. The state permits are all in hand. And New World has been doing a lot of work on that, and the outcomes of those are expected throughout 2025. As you can see, Arizona, as I mentioned before, is sort of copper central in the US. A lot of mines have been permitted there recently and will be coming into production. And there's at least 4 that we know of that have had recent permitting success. So, this project is on track for near-term permitting.
So how are we going to pay for this acquisition? I think importantly, the first point is that the transaction is going to be funded from our existing cash and from a new credit facility. So there's no equity required for us to acquire New World Resources. So we're going to borrow $120 million from BMO, ING, and SocGen, and that will be over a 5-year period. With an interest rate of 4.15% plus SOFR, so that's around about 8.5% in total. And we have a 6-month grace period on that facility as well. On top of that, we also announced for our full year results that we had cash in the bank of $68 million as of December 2024, and also $10 million of undrawn overdraft facilities. So all in all, even post borrowing this $120 million facility, we will still have a strong balance sheet, and our net debt to EBITDA should be in the order of around about 0.5 times. And that means that we'll still be able to continue with our current capital allocation priorities, which is investing in our existing businesses and, of course, returning capital to shareholders.
To close out here, so what we're going to do is look to overlay our team's experience with New World as we progress the project over the next few months. That'll focus on the DFS and ultimately into construction and production using that dry stack tailings, paste backfill, and long hole stoping and underground mining experience that we do have. The asset does introduce near-term growth into our portfolio, and we're looking to complete the transaction in September this year. As I said, the DFS is underway, so we're working alongside that. And in due course, we are going to be evaluating options for construction financing. The project is currently unconstrained by any financing methods. In terms of timing, projects of this size typically take between 1 to 2 years to bring into operation. But we do have the support from our existing cash flow, plus also an excellent team, and New World having made an excellent start to the feasibility study to configure that and to deliver this project in a low risk way. Okay, well, thank you all for attending. Hopefully you've got what you need for now, but if you don't, please feel free to contact any of the 3 of us over the course of the next couple of days for further discussion. And we're very excited about this and looking forward to working together with New World to complete the scheme and complete the transaction by the end of September and add this to our portfolio. Thanks very much.